This is what I've been wanting to do for a while.
Well, good. This like jumps you into it.
Yeah.
Hey guys, welcome back to my channel. I'm Sintia Salvador with the Desert Dreamers team at HomeSmart. I've got Kadyn Nannini with me here today.
Thank you. Yeah, thanks for having me. Kadyn Nannini with VIP Mortgage here in Phoenix. Happy to be here and talking and helping people.
Yeah, so we're going to go over some tips and tricks, things to kind of help people, especially in today's market.
I mean, yeah, elephant in the room, like you had said. We're in an interest rate market that we're not used to, even a little bit higher than what we would think for a balanced market, but historically still a pretty good number. We're just so used to 2 and 3% rates. So definitely some tips and tricks we can do to work around that.
Yeah, so let's get right into it. Also, Kadyn does have a YouTube channel himself, so be sure to go ahead and like this video, subscribe to both of our channels, and stay tuned for all the videos that we post. And then I'll also leave our social media in the description below. Kadyn is a loan officer, so I wanted to just kind of talk to you today about tips and tricks, like we said. And the biggest thing, elephant in the room, what are the interest rates today?
Yeah, they're roughly low 7s. This isn't a quote, but we're sitting around low to mid 7s for anyone purchasing a home right now.
Yikes.
That's kind of the reaction I typically get. Again, just trying to help. I don't make the rates, folks. But trying to just guide people in the right direction. I always will think it's a good time to buy. But like I said, it's not something we are used to in recent history.
Yeah, and there are different programs out there as well for first-time home buyers and other lending programs that Kadyn offers. And of course, there's a lot of opportunities out there to still be able to buy a home. For first-time homeowners, though, what kind of opportunities are there for them to be able to afford something with the interest rates right now?
Absolutely. So I mean, there's still people who are able to purchase a home. Interest rates are a little higher. It has taken some people who have lower to moderate incomes out based on just income or even debts, which we'll get into. But it has taken them out of the market. But there are still plenty of people who can still purchase a home. When it comes to certain programs, it's more so just different ways in how we can get creative with financing, with potentially having a seller buy down the interest rate, or there's a 2-1 buy down, which I can get into. But there's different ways we can help buyers with the interest rate. All in the meantime, down the road you could refinance. But yes, it can be a scary time. There are ways to help that financially and emotionally. But this is always going to be a good time to buy, and we could talk on that as well. Yeah,
and something we hear about a lot in the industry is this 2-1 buy down. So let's talk about that a little bit and kind of inform people what that actually means.
Absolutely. So let's say if you're getting a conventional loan with either 3 or 5% down, you're going to get associated a rate you qualify for, which will probably be, like I mentioned, in the low to mid 7s. What you can do is, instead of having a price reduction on a home, the big thing is we'll have just the seller credit closing costs. Whatever the number is, 3-6%, whatever the loan program allows for, and you take that money and you basically prepay interest on your conventional loan. So when I say that, the first year your interest rate would be 2% lower than what it is today. So let's say if you qualified for 7%. For the first year, you'd have a 5% interest rate for the first year of the loan. And then the 2-1 portion of it is the second year, you have an interest rate that's 1% lower. So what the seller's doing is that difference in interest that you would have paid on your higher interest rate, they're paying that off for you so you can have a lower interest rate so you can get used to the higher payments. The beauty of the 2-1 buy down is the last 2 years. Based on a lot of experts that I follow and hear and listen to, that's probably about the scenario we'll be in to be able to refinance within the next 2 years.
And it's something we hear about all the time. You're always hearing 2-1 buy down. There's also, I've heard 3-2-1 buy downs now. So it's
same setup.
Yeah, and there's so many different ways to be able to afford it. I mean, 7% interest that's pretty high. Not as high as it has been before.
Recent history, though, it's high.
Yeah, for sure.
I can feel for people there, but it's still payments for homes are not so insane that people can't qualify for them.
Right, and that's something we're seeing often too. So a lot of sellers right now, their home is sitting on the market a lot longer. And so buyers have this way to negotiate, and they can use the 2-1 buy down, or they can have concessions where the seller would pay closing costs or a portion of it, and they're able to negotiate that in the contract right now.
That's the best thing for first-time home buyers. Any home buyer right now, but first-time home buyers where you're not tied to a property and having to sell it. that you're able to negotiate with the seller, and you're able to get credits, closing costs. You're able to negotiate kind of timelines for closings, because those people have to sell them and buy a new one. So
right.
if you needed a longer time to get your stuff and get moved in, there's so many benefits right now, and less competition to kind of go with people having to fall out of the market. You're not seeing 5, 10, 15 offers on a home.
Right.
You're maybe seeing 1 or 2, so very little competition, and you kind of get to set the negotiations.
Yeah, and so much more options. I mean, like, I've had buyers go out 2-3 times to the same property just to see it again.
Yeah.
And it's like,
that wasn't happening 2 years ago.
No, not at all. Even just a couple months ago, people would, if you saw a home, you had to jump on it, and that was it. So it's nice to be able to see that change a little bit, and especially with buyers kind of coming back like with a vengeance.
Yes, absolutely.
But let's talk about money, the big bucks.
Yes. With higher interest rates and how debt to income works, which the quick rundown on debt to income is, we take your monthly income, we figure that out working with underwriters and making sure based on their loan program, what's the qualifying income we can use. We take that at either 45 or 50%, so we can take about half of your income. Once we have that number, we then subtract your existing debts like car loans, student loans, credit card debt, and that gives us a number that you are able to purchase a home with that monthly mortgage payment. So with interest rates rising, you would see that the mortgage payment portion outside of taxes and insurance, as interest rates rise, it affects how much you can take on in payment, which then reflects purchase price. So that's what you're seeing when people were falling out of the market because they weren't able to afford as much as they could before. But yeah, I mean, that's the quick rundown on debt to income. The one thing I would say that is the most important thing that I've learned as a loan officer and for people to qualify is, as you just heard, we take half of your income, but 100% of your debt. So your debt weighs twice as much as your income. So it's going to affect you more having more debt than making more income. So always keep that in mind. And then, like, if I was giving advice to someone coming out of college or doesn't have a car yet, buy a house before you buy a car, because no auto dealership is going to care if you own a house or not.
Right. You heard it here, folks.
Just guidelines, folks.
Right. And I mean, it's super important, especially nowadays with debt. It's like, I think people just kind of swipe it under the rug and just worry about it later. But especially with budgeting, I think it's really important to kind of set that expectation. If you're going to be thinking about purchasing a home, you not only have to think about budgeting the small stuff, but also budgeting for a mortgage payment. And that doesn't just include like your HOA and your taxes and everything on top of that, like mortgage insurance.
Yep.
So I think it's really important that people budget as well.
100%. And I guess even just a real life scenario, I recently got into a car accident and completely fine. I got rear-ended. My car was totaled. I was not too pumped at having to get a new car knowing my payment was going to go up. So I tried to keep it as minimal as possible because I want to buy a home next year. So like those are the things to think about when it comes to if real estate's a true goal of yours. Understanding that every decision can play a factor.
Yeah, I'm glad you're okay. And also, if you need an agent to purchase a home, you know where to find one.
Put me on the spot.
So budgeting, I know a lot of people aren't going to want to hear this, but let's say with like little things, right? You don't have to start super big. Start little. We love our coffee.
Yes.
You get one every day, Monday to Friday. What's a cup of coffee? Like $5? Sometimes more.
About 5, yeah.
So let's say you get a coffee every day, $5. The week, $25. The month, the year. Yeah. I mean, this all adds up. $1,200 is what you can save a year just by not having a cup of coffee every single day. Now, if you really want a cup of coffee, like a couple times a week, do it. Please do it. Like, live a little. But at the same time, don't go and get like a venti iced. I don't even know what.
Yeah.
Right? Like, just kind of think about that when you're going out to get your next coffee or lunch.
But when I think of like budgeting, I think of sacrifice. And I will say most people cannot purchase a home without sacrifice. It's a financially better situation to be in than renting, and it comes with sacrifice. That's why not everyone owns a home, but everyone should. And then along those lines, I think a lot of people get shocked by what a mortgage payment might be from what they're currently renting. Some people only rent a room and it's like $500, and then they go to buy a house and it's significantly more. The one thing I've passed along to clients is just saying, hey, if here's your current rent and here's what you think you could qualify for a mortgage payment or what you think you could comfortably pay, then start paying it. And then instead of, if you could give up coffee, or you could do something along the lines of, well, I guess if my rent's $2,000 and my mortgage is going to be $3,000 and I need to get used to it, start putting $1,000 away and actually, mimic that mortgage payment you might be taking on.
Yeah, I love that too, because I feel like people aren't really thinking that far in advance sometimes, where they're just comfortable with paying what they have to pay right now. So hearing that is really good advice.
I've gotten a lot of good feedback from it, and it's just a very useful tactic.
Yeah.
And the money stays with you. Yeah.
Okay, so speaking of debt, credit scores.
Super important.
Very important.
Yeah.
What do we do if we don't have a great credit score?
Yeah, I mean, it depends on what loan program you end up going with. Typically, we want to see 620 or 640 or higher. There will be a loan program for you then. Anything lower, there are options, but it just becomes a little bit more difficult and more expensive. But if your goal is to improve your credit, some super important tips are, first off, there's just paying debt often on time. Just on time and history is the biggest portion of your credit score. But here's the biggest one that I've been passing along to clients that they're just not, they just don't know. So most people pay off their credit card at the end of the month. Well, the actual number that gets reported to credit companies or credit reporting agencies is actually your statement date. So if your credit card, your statement date's the 22nd, and you're paying off your balance on the 30th, they've already reported the higher number. So credit utilization is how much of your credit card you're using. So if you max it out by the 22nd, you're showing you have a maxed out card on your credit report.
Tips and tricks.
Tricks. So I would say that the biggest thing I've been trying to pass along to people is make sure you're paying down the balance to whatever you want it to be by the statement date, and actually paying attention to that. Credit is not something that the government has wanted us to know, like how to operate. So
this is so interesting. If you're not taking notes already, you should be.
So along with that, so credit utilization accounts for like 30% of your credit score. The goal to keep your credit card limits by that statement date is about 20 to 30% or lower. That is the number I try to encourage people to do, and how I try to live my life as well. So
you have your tips now for getting your credit repaired. You've got a good credit score. What's the next step with down payment?
I guess it all stems back to, when do you talk to a loan officer? I feel like there's a lot of times that I talk to somebody and they're like, I want to buy next month. And I'm like, well, there's no groundwork, there's no foundation to what we're trying to do here. Oddly enough, I think that 3 to 6 month mark is a great time, because it allows for us to be flexible and go, okay, here's how we can change things up with your financial outlook. But in that conversation, I, as a loan officer or someone else, can see what you might qualify for based on credit score, how much money you have. And there's down payment programs with minimum down payments from 0 to 3.5%, 5%. So there's plenty of options. 0% being for veterans, or USDA, depending on where you buy. Can't be in an urban area, but there's so many options out there that I think people don't think about, and going, oh, $500,000 house, my down payment could be as low as $15,000.
Right, and I think that's another thing too, is that people don't think about it as soon as they should be thinking about it. They think, okay, well, next month I'm gonna just start looking for a home. And I think you should really take that back a couple steps and think about finances first, and speak to a loan officer and get that in order before you actually start looking, because that could really determine what you're even gonna start searching for.
Absolutely, and we are free of charge just for our time. I get that question a lot, like, how much do I owe you? It's like, nothing, we're just here to help. If you use us, even better. For your loan, but we're here to make sure people are able to purchase homes, and they're in a position that they can do so in a smart financial way.
So you got your budgeting in order, you got your debt to income in order, or at least you're working on it.
Yep.
Credit score is repaired, down payment. Let's talk pre-approvals.
Basically, a pre-approval goes, we've looked through everything as a licensed certified lender and gone, this is what you could be pre-approved for, and here's how it translates to a purchase price. It's super important for not only you to know where your numbers stand and what you can qualify for, but super important for your realtor, so they know what you qualify for. Everyone's on the same page, and we're all looking at homes within that budget.
Last thing you want to do is get your pre-approval. Let's say you're pre-approved for $500,000, and you start looking at $700,000 homes.
Yep.
That's not what you want to do.
Devastation.
Yeah.
That is what will happen.
Yeah. Let's not do that.
Emotional damage.
Yeah, it's better to look under what you're pre-qualified for or pre-approved for, than especially to go over. You never want to do that.
No, and to touch on that, so when we pre-approve you, everything is based on income, that is all based on before tax numbers. You have to live on after tax numbers. So it's nice that we're able to approve you for a certain amount and we're not being limited by the numbers after taxes. But those are the numbers you have to live with day to day. So those are the numbers you have to be comfortable with. So like, say if you're pre-approved for 450, maybe 400 is the purchase price you want to be around because the numbers make more sense for your day-to-day life.
And I'm so glad you bring that up because I feel like people see the number on a sheet and they'll say, okay, I'm approved for 450. Let's push it to 460, 470. And it's like, that's really not the right mindset. It's way better, like you said, to even be below that because it's before tax. So you have to take that into account. You have to also take into account every other day expenses that you're going to have outside of your mortgage.
Working with two people who understand that in the real estate industry is going to be super important. Don't be afraid to have those discussions. I've talked with plenty of people who are like, it's awesome, I can afford that, I don't want to buy that. And that's completely fine. But I was in a situation when I bought my first home, we bought at the pre-approval number. It was just like, it was the house. It made sense. We could make the payment. We knew what we were doing. But just each person's different. Somebody could do that. Somebody may not want to do that.
Right. And that's why it's important to talk to a loan officer, talk to your realtor. Like, we're working on this all together to ultimately help you. All right, folks. So there you have it. Tips and tricks, what to do, who to go to for any kind of questions that you may have about purchasing a home. I'm going to leave Kadyn's information below. And I'm also going to have my information, of course, if you guys are looking to buy or sell. But Kadyn, you are licensed in 3 different states, right?
3 states, Washington, Oregon, and here in sunny Arizona, yes.
So there you go, many options.
Hopefully this video, cleared some things up, brought a little bit of reassurance to you in your home buying search or your life. But I'm just happy to help. Yeah,
absolutely. And we're always here to help. So let us know, reach out to us. Make sure you hit subscribe on both of our channels. I'm going to link Kadyn's below, and we'll see you on the next one.
See ya.